and some of you might try that, uh, creating your own NFTs. Okay, so blockchain and tokenization, right? So now the question comes, whether tokenization is a new concept. No, tokenization as a security measure used to be used back in 1970s, right? So basically, rather than keeping your details, right, break into, so rather than taking your whatever 12 digit or 16 digit of account number or your kind of whatever your credit card number, right, in a single place, what they used to do, banks, generally Citibank or Amex or whichever bank you have your credit card or this kind of account details, they will divide into different tokens, different uh, combinations of digits, right? And later on, when you want to use that for transaction, then they can combine it, right? So that is how tokenization concept used to be kind of used in case of this kind of security, right? Banking security. Coming back to your crypto economy, or when we talk about these kind of innovations in blockchain, right? Now people started thinking about how we can use this kind of tokenization concept, right? Breaking a big number into smaller numbers, smaller chunks, and use it in blockchain, right? Rather than using only it for security purpose, can we use it in allocating assets, right? So that is the kind of meaning, or that is the intent of tokenization, right? But before going that, let me just talk about the difference of traditional economy, what is the real world economy right now, and what is happening on the crypto economy. So, who are the traditional economy participants? People like you and me, right? Government, corporations, banks. I want to purchase a house. I have to go to bank and take a home loan. I have to buy a vehicle. Either I should have that amount of money, or again I can take a vehicle loan, right? So this is how your, so fuel of the economy is that currency, right? Whatever for that country, that legal tender, some currency has to be there to fuel that economy, right? And that currency keeps fluctuating. Same situation here, crypto economy. There are developers, miners, right, who generate that cryptocurrency. Investors, let's say I do not want to take participate in mining, I can buy cryptocurrency and I invest. Then entrepreneurs who are developing different kind of, let's say this insurance, farm, supply chain, different use cases are happening in that regard. So we have to fuel this traditional economy. We have fiat currencies, USD, Euro, Yen, Indian rupees, to fuel the crypto economy, right? So there is something known as tokens, right? So we'll discuss what do you mean by token and how it is different from a cryptocurrency. Then what are the asset you have in real world economy? You have physical products, right? Factories, machines, software. In your crypto economy, these are the smart contract, right? Because one of the major applications of cryptocurrency, rather than only creating currency, is how you can automate many things, right? Rather than having a third party, can that exchanges happen automatically through those smart contracts? If you remember, we discussed about smart contract. These are the line of codes, which is our legal contract, is replaced by a smart contract, right? Then goods, we have whatever manufacturing goods are the intangible goods services, right? In the crypto economy, the goods or the assets right now are known as non-fungible tokens. We'll discuss what is that non-fungible meaning is and what we mean by tokens separately. Then how to exchange things. I can go to Amazon, I can go to Flipkart, buy things, right? Same situation here. There are decentralized exchanges where I can buy and sell cryptocurrencies. There are different exchanges where I can buy these assets also, right? Those which are non-fungible tokens, right? Then institutions, government, municipalities, central bank, corporations, reserve bank, and all those regional banks. Then this is the decentralized autonomous organizations, which we talked about, where decisions are being taken by the smart contracts or the logic or the algorithm, right? Not by the humans, right? So if you remember, there's automated market maker or that maker DAO. Maker DAO is a basically lending, borrowing kind of a organization, right? I can lend money and people can borrow money. That is going to be actually decentralized autonomous organization, right? There will be no people who are going to manage that. It will be automatically, it will be managed. Just see the like concept. It will be managed full autonomous. There won't be any human involvement. All the decisions, what will be the loan rate, what will be the exchange rate, how much dividends will be distributed. Everything will be decided by the smart contract, right? Obviously, people will be there to, till now we do not have that kind of technology or artificial intelligence who can check the code and correct the bugs, right? Obviously, there are certain malfunctionalities, server is down. So till now, we do not have that kind of technical excellence that everything can be autonomous. Software developers or people who will be there in the background will be looking into if any problem happens, somebody wanting to hack that system. So they'll try to kind of rectify those problems. They'll be continuously trying to improve the code. But the point is, think about a normal bank, right? So depending upon what RBI decides, right? The bank management, the top, let's say State Bank of India or HDFC, they'll get together and say that, okay, we'll keep the home loan interest rate this much, we'll take a vehicle loan interest of this much. If somebody is keeping kind of money in our account, savings bank rate is 4% or 3%. If they're keeping a FD, rate will be 5%, or if they're keeping RD, rate will be 5.5 or 4.5%, right? All these things are being decided by the management, right? Human like resources, people who are actually going to decide based upon their experience, based upon their logic. In the decentralized autonomous organizations, everything will be decided by the smart contract, by the algorithm. Once your algorithm is written, automatically it will keep changing or it will be deciding, right? Think about that automated market maker, right? So once you put that algorithm, nobody is going to decide the exchange rate. It will keep increasing and decreasing depending upon the supply and demand. Same situation here also. In between, please stop me in case if you have any doubt. So now the concept of fungibility, right? It is a very simple concept. Fungible means if I can exchange it to a similar, let's say I have a 10 rupees note, right? So I want to exchange. Let's say it is turn out, or let's say I just go 20 rupees, or I want to 100 rupees or 500 rupees. I want to make certain changes. I'll go to a bank or I'll go to a shop and I'll say that, Bhaiya, can you please give me 500 rupees notes, right? So this is interchangeable, right? So either 500 rupees, 500 rupee note. But if I have a 100 rupees note and you have a 100 rupee note, right? Value are equal and I can exchange. If I say that, give me your 100 rupee note and take my 100 rupee note, obviously, if I'm not giving you a fake note, you'll take it, right? You won't have any issues, right? So this is how any kind of money you take, right? So those are fungible assets. Or if you have gold, if you have any asset which you can go and exchange. If I have certain gold, or if I want to buy gold, I'll go put some 30,000, 40,000, or 50,000 rupees and take it 10 gram of gold. Certain jewelry or certain ornaments I can buy out of that, right? So that is where the fungibility means, can one asset can be interchanged for another asset, right? Exchange with another asset. Non-fungible means not interchangeable, right? Think about when I was in school, there was a craze about those cards used to come. Sachin Tendulkar, Binod Kambli, all those. I think in some bubble gum or some this candies, they used to keep those cards, right? And we were crazy to collect those cards, right? And I heard like certain friends, they were like kind of. I think they used to have those 50 or 100 cards. So think about those cards. So those are nothing but your non-fungible, right? So that has certain value, at least for them, right? And in that community, same situation here. Like if you have a very good like kind of artwork, you will have certain antique items. You might have certain antique items which have been at your home for last 100 years or 50 years. Let's say there is an antique clock. There is a very old clock which has been used, or which is there in your house for last 100 or 150 years, right? So that has certain values to it. It is not that, okay, sell it for 100 rupees. That is a very unique item, right? Think about if I take that example of a 100 rupee note. 100 rupee note, I can exchange it to, you can exchange it and give it to anyone else. But let's say you are in a airport and you saw a celebrity, right? Your favorite celebrity, and you do not have anything, and somebody signs it. He or she provide the autograph on that note. So now what happened? That has become non-fungible because now it has certain uniqueness to it. right? Fungibility was that normal note, 100 rupee note, right? I can exchange it to a 10 rupee note, 5 20 rupee note. That was fungible. But now once somebody, celebrity or somebody signs it, obviously celebrity, you sign it or I sign it, it still don't have any non-fungibility aspect of it. But it now, because due to that celebrity signature, it has certain uniqueness to it, right? So that is where your non-fungibility comes, which generally cannot be exchanged to another asset, right? You similar asset. Obviously, if I want to sell that, I'll say that okay, I have a this celebrity's autograph and I want to sell it for 1,000 rupees, right? So the value is not now no longer 100 rupees, right? It has changed. So I'm not telling it cannot be exchanged, but not with a similar asset. So it is no longer that 100 rupee note. It has increased its value, right? So that is the non-fungibility concept. Think about Mona Lisa painting, right? Why do you think that if there are people who can like kind of copy that exact Mona Lisa, if we are amateurs like us, we will not able to find difference between which is the real Mona Lisa, which is a fake Mona Lisa, and that is a lot of theft, lot of these kind of things happen in art world, right? Lot of fakes people generate on like kind of famous artist name, but because there is only one item like that, that becomes, and it cannot be exchanged with another Mona Lisa, right? It has certain uniqueness to it. It was created back 200 or 300 or 400 years back. That is a signature, that is certain like marks by Leonardo da Vinci. It is stored someplace, right? So that is the uniqueness part of it. So that is the non-fungibility part of it, right? Then the concept of tangibility and intangibility, right? Tangible means obviously which you can see, which you can feel, right? Like the concept of product and service, right? Products are tangible and services are most of the times intangible, and that is the concept of where we bring that physical evidence concept. So we might have tangible kind of assets, houses, cars, maybe certain artwork or antique clocks, or we might have those kind of gold, rupees, certain assets, right? Oil. So what is the difference? Some assets, some tangible assets are non-fungible and some tangible assets are fungible. Think about your car, right? It no longer, like if it is a new car, yes, like it is in the showroom, all cars have equal value. But once it is your ownership, you use it for 6 months, it becomes unique. Let's say your grandfather or your father is using a vehicle for 15 years or 20 years. It has certain unique value to it. If it is a very like famous brand of which they do not have a newer model in the market, it will have certain uniqueness to it. Your house, it will have certain uniqueness to it, right? So that is the non-fungibility part. But if I have $100 note or 50 rupees coin, right, it can be exchanged to another 50 rupees coin, right? It is fungible and tangible, right? I can see it. Then there is something called intangible, right? Which I cannot see. All your cryptocurrency, if some of your have your cryptocurrency, you cannot see it. These are lines of code. This is in your wallet, you cannot see it. It is not like your physical kind of currency which you can see and feel, right? So that is the concept of tangibility, right? Which you can see and feel. So these are intangible, sorry, Bitcoins or Ethereum or whichever cryptocurrency you have. These are fungible and intangible. Fungible why? Because I can exchange one Bitcoin to another Bitcoin, right? So there is no difference. So nobody will tell that this Bitcoin is unique or this Ethereum is unique or this. I can exchange 10 Ethereum for one Bitcoin, right? So I can do that, and I can divide it also. I can divide it to zero point 0.5 Ethereum. I can divide it to 0.001 Bitcoin. So divisibility is one part of your fungibility. Fungible asset means I can divide, but it is not possible in case of car. I cannot say that take 20% of my car, take 10% of my house. It is not possible in real world, right? Then non-fungible and intangible. So this is a crypto asset, cryptocurrencies who are fungible, right? I can exchange it with the similar item, right? Then there are crypto assets which are non-fungible, right? Which are certain uniqueness to it. Think about whoever is your favorite singer or favorite Bollywood celebrity. They have a autographed digital artwork or a song. Let's say Shreya Ghoshal or Arijit Singh. So they create a song and now they say that okay, I'll keep that. Earlier, what used to happen? So somebody who are like kind of last 10 or 15 years, I don't think any of us has paid for any buying any cassette or anything, any music, right? Any music CDs or cassette, right? Either in YouTube or any, there are many channels where we can listen to that music, right? So, and there is no difference, right? One copy of, if it is in my laptop, one Arijit Singh song, and your laptop, it is both same, right? There is no uniqueness to it. But if that song can be digitalized in a such a way that there will be a certain uniqueness to it, and you know that it was generated by Arijit Singh, now you own it, right? It is so that kind of signature, right? And that cannot be copied. Now what happens if I give you a song in your laptop? Let's say you send it through email or you put in Google Drive and download it, right? All the thing remains same, right? Nobody can differentiate it. But in the non-fungible tokens, nobody can now copy it. That is very unique. If you buy it, it will be with you. Now I can show that, okay, the first song by Arijit Singh on year 2008 or 2010, I own that. I have the rights to it. I partially own that. Obviously original ownership will be always with that artist, right? Similarly, think about the autograph cards. Earlier what is, so that was the challenge with digital things, right? Because if I have a autograph paper or a autograph currency note, it is very unique, right? But something like a song, something like a artwork, if I have a copy of the Mona Lisa art, how will I difference, okay, this is the unique, this is something which was created by the original artist, and this is something fake? It is very difficult to kind of have that value, have that differentiation of value, right? But now what happens with your blockchain, with applying that blockchain concept, now we can create that uniqueness with that identity. Now somebody can check that, yes, this is the original artwork, this was created by this person, now this person owns it, right? And that is how you increase the uniqueness. So blockchain assets, so that is why that crazy, or obviously it is so the problem with, whenever humans do not do anything, they do not do anything. Whenever they do anything, they overdo it, right? Now people started putting money on NFT, and I'll show certain examples. You will not believe the amount of money people are paying for crazy things, right? So that is where the uniqueness is coming into picture, right? Because earlier what used to happen, digital songs, artwork, anything which is digitally available, right? Anybody can. So think about your favorite author. I do not know how many of you still read. Nobody now is buying a book. Everybody, you can download it, same copy of book in your laptop, in my laptop. But think about it, if I can put it in a blockchain, and it will have a unique identification of that author, my favorite author, which with certain meta words or meta tags. Now what happens? The first book or the autographed book by that author is now owned by me. I can say that, I can say that, okay, that was the first book by that author, which is now owned by me. So that gives certain uniqueness to it, which can be done through all these blockchain concepts. Any questions on this before we proceed? So blockchain based tokenization. So now the concept of, can we divide? Next slide we'll see an example, interesting example. And before that also, blockchain also, people started thinking about that kind of concept. It is not new, but blockchain actually helped in kind of accelerating that process. So you can tokenize collectibles, devices, real financial instrument, your real estate certificates, fixed income, any type of asset you have, right? Consumables, precious metals, intangible assets, you have certain patents, licenses, royalties, trademarks. All these things can be put in blockchain and can be tokenized. So now what is the concept of tokenization? So we talked about asset classification, fungibility and intangibility, tangibility. Now the concept of, if let's say I have a Mona Lisa art, let's say now I acquire Mona Lisa art, it is let's say 5 million or $10 million, right? And I do not have buyers who are going to pay me $10 million. Or let's say, simple example, let's say I have a photograph of Amitabh Bachchan or some big celebrity, right? And I want to sell it for 50,000 or 20,000 rupees. People won't, let's say, pay that 20,000 rupees. Okay. Now what happens if I'm able to tokenize it rather than having that autograph? let's say autograph of or a song, or let's say book, which is autographed by the original author. Now I'll digitize it and I will put it into a blockchain and I'll create tokens out of it. So I have a asset, I have a digital art, digital autograph which I have scanned and digitized it, or I have certain old kind of songs or a digital artwork, right? Now I'll put it into a blockchain and tokenize it. The tokenize it, like you remember what we discussed, putting into smaller parts, right? So I'll say, take this, or let's say I have a created a song, or I have written a poetry, or I have very good in Adobe, and I have created a good digital artwork. Now I want to sell it, right? So now I'll what will say, rather than selling it to a single person, I'll create tokens out of it. I'll create 100 tokens or 50 tokens or 10 tokens out of it, and I'll show that, or I'll say that okay, I can say that okay, this is only single token also, right? And I'll say that okay, whoever I for this artwork, for that digital artwork, I want to sell it into let's say zero point 0.5 Ethereum or zero point 0.2 Ethereum, right? That Amitabh Bachchan's autograph, I want to sell it for 0.3 Ethereum or zero point 0.1 Ethereum or 0.01 Ethereum, right? And I can sell that into now in a digital marketplace or NFT marketplace. And people who will buy that, now my ownership has been changed from me to that person. That is where all these applications of blockchain are happening in the digital art or the digital like kind of songs, all these things which can be digitized, right? So think in this way. Let's say you are very good in creative art, designing. You can use that space to create your own digital fantasy images. You are a, let's say very avid gamer, so you can take right now. I think in this Squid Game, I think all of you might have seen that in Netflix. That somebody created an NFT out of it, and that sold into a few Ethereum or like in thousands of dollars. So that is now the interesting part. So you can create that digital artwork, monetize that digital artwork. Earlier, what used to happen? Somebody created and nobody will know. I can put it into my PPT, or I can put into my Instagram and share it. That ownership identification was not there. Now what happens? Once somebody creates that unique identification, that owner, who is the owner of that, always will be there. Then obviously the ownership will get transferred. But the original creator, let's say you created a very unique digital artwork, that creator name always will be you. Nobody can change that. Then obviously if you want to sell it, you can sell it, and somebody now owns that, but created by you. So that uniqueness will always remain there, right? So that is how blockchain is helping on tokenizing all these digital assets. Yes, Swagat.
Yes, sir. So my doubt is that you said that we have to tokenize that Amitabh Bachchan's autograph. Sir, then there will be, if we make this 100 tokens, then there will be 100 customers and 100 buyers. Then who will be the one buyer who really owns that autograph? I
So
want
in
to
that
know
case,
that.
if you're selling it to 100 tokens, it will be partial ownership, right? So I cannot say that I own it. I own this percentage of that token. I own this part of that house, or that part of that artwork, or that part of that. So percentage, partial ownership comes kind of. So that ownership is now not, if I'm selling it for 100 tokens. So each token owner will have that much 1% of ownership. If I have 20 tokens, I have bought 20 tokens. I have 20% ownership of that artwork or autograph. So that is where your partial ownership comes into picture.
Then sir, that will be no use. There means they can't be said. They can't say that they totally own that autograph.
No,
Partial.
and no need to, right? And that is the good part, right? Think about today. So do you think that if somebody sells you this, I don't know whether you are interested in art or not, a Mona Lisa painting, obviously we do not have that much money for millions of dollars, 100 millions or 200 million dollars to own a Mona Lisa drawing. Let's say Raja Ravi Verma, or whichever artist, or whichever your favorite song, like kind of artist,
Yes, sir. Yes.
right? So obviously you cannot own, like if somebody is selling that for 50 lakh, now they consider partial ownership. We can always claim that I want 5% of that song, I want 10% of that song, because you have 10 tokens of that, and you can sell it again. You can sell that ownership to somebody else if somebody else is paying more money to it. So it need not be the full ownership. So if you, how much
Okay, sir.
tokens you of that, you can always say that okay, you have that partial ownership. So this the same question what Swagat was asking, people have started using it before blockchain also, but blockchain right now is helping. Think about this way: if we want to invest in an apartment in Bhubaneswar also, right? Minimum apartment rate is 50 lakhs, 100 lakhs, right? Uh, you you do not have that much of money, so that is something instrument called REIT, right? Now companies again, I'll start with the example where blockchain is not used, then how blockchain is helping, that we'll discuss. So think about some law company, right? What they'll do, so they will have a deal with the constructor, uh, like whoever is the construction agency, right? So they have 10 apartment or 100 apartment. Now what will happen, I have or we'll take a example of a single apartment, that will be cheap. Let's say there is a apartment or a bungalow which is 1 crore rupees, right? That person, or as a law firm, I do not have that money. Now what I'll do, I'll create a asset of that asset, change that apartment to a asset. Obviously that is asset, but now I'll say that okay, that is a investment, and I will create 1,000 parts of it, 1,000 investment tokens. So bungalow price is 1 crore, right? Rather than 1 crore, I'll now change it to 1,000 tokens or 1,000 units. Before blockchain came, it was unit. So 1,000 unit means what? Each unit will have how much value? 1 lakh, 10,000 rupees, right? So 1,000 tokens of 10,000 each, and I'll put into a market, like your mutual fund happens. Now what will happen? You might have some of you or all of you have 10,000 or more than 10,000 rupees. So you will say that okay, I'll invest in this apartment or I'll invest in this bungalow. So let me, or I'll say that I will also invest. I'll buy 5 units. Some of you will buy 10. Some of you will buy 15. Like that. Let's say all this class got about 20, 25 people, but all those 1,000 units, right? Now what happens? We do not own completely that apartment, but we have that partial ownership. 5% or 10%. Somebody has 20%. Somebody has 2%. Somebody has 1%. But minimum has to be how much? 1,000 tokens means 0.1%, right? So minimum ownership has to be 0.1%. Now, what is the benefit to me if I'm having that asset? It is just not for a fun, right? Unless I want to sell it later on. That is one thing. I can sell it later on in a higher price. That's I know that in bungalow prices in Bhubaneswar and Kolkata will keep increasing. If I have a 0.1% ownership and I have paid 10,000 right now, after 5 years or after 3 years, when the bungalow prices will be around 2 crore, I can sell that to 20,000 rupees and I'll get that margin of 10,000. So that is one advantage. Like you do it in mutual funds, right? So mutual fund, you buy units, and after certain days or after certain months or years, you sell it, right? And you get a profit. Same situation here. Yes, Ankita. Yes.
Sir, I have the doubt like if it is being distributed among 100 owners,
Hmm.
then their consent will be required to sell the property. So will not it be a
No, I'm not selling
necessary
the
risk
property. I'm
if
selling my part of my property, right? I'm not selling your property, right? I'm selling 0.1%, which is owned by me. So it is not that okay, somebody is buying that physical building. Ownership of that building, somebody is buying 0.1%. Obviously, there are other rules and regulations. I cannot say that okay, I'll go and stay there. I own that 0.1%. I'll go that and stay there. It is not possible. So I'll say that okay, I'll only stay in the 0.1% of area, or I own 20%, so I'll go and stay in one room. So obviously that is not possible. Those rules and conditions are there. It is just an investment asset, and I own that 0.1% of that investment asset. So not that okay, I go and stay there because I own 20% or 10%. I have 10% ownership and I'll stay in the 10% area. So it is just an investment asset. If I have 0.1% or 0.5%, whatever it is, right? Minimum denominations, I can sell it. If whatever the prevailing rate that time.
So
Is it
no
clear?
one is going to stay in that house.
No, that will be given on rent, right? So it is not that I own it, so I'll go and stay there, right? So how does it work? So let's say all the office buildings, who is staying? Infosys, TCS, those employees are working. So they are giving rent to that organization, right? Let's say all those office buildings, 10 floors or 9 floors. Each month they are generating a rent of 10 lakhs or 20 lakhs of rupees. If I own 5%
Yes.
of that, now that 5% of that rent will come to me. Like you get a dividend on stock. So what happens? So it is not that you own TCS share and you will say that okay, I'll become the TCS chairperson. I won't do any job. I'll become TCS chairperson because I own it, right? Not possible, right?
Yes.
So I own 0.001% TCS share. Whenever TCS provides dividend, that comes to me, whatever my number of shares. Same situation here. These buildings, apartment, bungalows, it will be given on rent to different people. So that agreement is different. They will be providing rent to that organizations. Now what happened? That organization is distributing that rent to all the owners. Earlier, what used to happen? That owner used to be that construction company or some big organizations. Now it can be owned by people like you and me who do not have that much money to invest 1 crore, 5 crore, but with 10,000, 50,000 rupees, we can invest there and get a rent on that, right? So let's say this whatever DLF building is there backend, right? If it can get converted into REIT instrument, the total building how much rent it is generating per month, let's say it is 10 lakh rupees, and I want that 0.1% of that. So I'll get each month 10,000 rupees rent. So that is how, and this was before blockchain also. It was not that blockchain came and companies have started this REIT instrument. In US and Europe, it was very popular, and I think in India there are embassy. There are 3 companies who are actually selling this kind of instruments. Now, what happens in blockchain? You do not have to have third party, right? You can get it. It will be very simple. So there is no third party who can change the rules. So if it is used in a blockchain, somebody, let's say that DLA building, the owner will say, now I do not want to invest. I want to sell it, and I'll sell it through this smart contract. So now what happens? 1,000 of us, 10,000. Let's say he created 10,000 tokens. Each token is 1 lakh rupees, right? So if you have 1 lakh rupees, you buy that token. You have a partial ownership of that building, right? But again, the rules and conditions will be there. Like I said, I cannot say that okay, I'll go and stay there. There will be other rules related to it because this is an investment asset, and whatever rent, whatever revenue that a building, that property generates, right? It will be equally divided by the token holder. So we are becoming that shareholders of that, right? So this process becomes easy in blockchain system because you need not have to trust anybody. You need not have to say that okay, it is already 10th of or 8th of November. I have not got the rent. Why the delay is happening? That person will tell that okay, no, because that some company has not given me rent. If everything can be automated, particular pay third of month from that company's bank account, money will be transferred to the like kind of blockchain account. From the blockchain account on the 5th of every month, it will be distributed to all the holders of the tokens. Right? Everything is automated. There is no third party who is taking the okay. I am the third party who is managing all the documents, everything. So I'll take a 0.1% transaction fee. Right? Nothing need to be there. Everything can be automated, and that is can be done through a blockchain. Is this concept clear? So it is not a hypothetical scenario. This is already happening. If somebody can search on internet, go and search on REIT. I think Embassy LLC, there is somebody else, they're already doing it without blockchain. Only thing is that with blockchain it can be simplified. Any questions on this? Then what type of different tokens are there? There are basically 4 type of tokens: payment tokens, security tokens, utility tokens, then non-fungible tokens, right? So there are different applications of tokens as a cryptocurrency like Bitcoin or Ethereum, which has certain value, right? Intangible, but it has certain value depending upon the exchanges, right? Then tokenized asset, which is just discussed. There is a building, there is a house, right? We can tokenize it, and we will hold that asset, percentage or fractional ownership of that asset. Tokenized platform, right? All these Ethereum, all these MakerDAO, which we discussed, right? That platform also getting tokenized, right? So remember what we discussed, that a decentralized autonomous organization, right? So in that case, what will happen? They also have that DAO, DAO, DAO coin or DAO token. If I own 10% or 5% of that platform, right? I'll be having that fractional ownership of that platform, right? Not ownership as such. I'll have certain voting rights. I'll have certain kind of, if let's say I want to make certain changes, right? I can vote it for, right? It is not that I own that company, because again, it is a autonomous organization, right? So that kind of, so some platforms like Uniswap, MakerDAO, they are also getting tokenized. Then token as a share. So if you remember, we discussed that compound protocol. If I want to lend certain money, if I want to borrow certain money, there is something called as compound tokens or C tokens, right? I'll go to that exchange. I will kind of let's say I want to lend money, right? I'll give certain Ethereum and I'll get certain 100 C tokens or 50 C tokens, right? So that becomes a share, right? So in that case, token in that terminology will become the share. You own that much of revenue or that kind of asset. So in some cases, somebody borrowed a interest on 10% or 5%. After 5 months or 6 months, they pay back with 10% interest. Then that 10% interest will come to you. Like we are discussing that liquidity pool provider, right? So once I'm providing that liquidity, I'll get certain tokens because I've given that 1 Ethereum or 10 Ethereum and whatever 35 lakhs of Indian rupees. So on exchange of that, I will have certain tokens. Whenever people are trading on that account, people are taking that money, giving that, putting money on that account, they're trading. So they will be giving that 0.3% of transaction fee. So that 0.3% will come to me because I own it. I own that liquidity pool, right? In that case, so that ownership will be through token because I own the 10 tokens, 100 tokens, or 50 tokens. I own that liquidity pool or part of that liquidity pool, and accordingly, that percentage of transaction fee will come to me. Think about that. That liquidity pool which was discussing. Let's say there are 10 holders, 10 owners of that liquidity pool. Each one of them have 100 tokens or 1 token, right? So what happens now? I have a 10% ownership of that token. Sorry, a 10% ownership of that liquidity pool. Whenever that transaction fee every day or every month, total transaction fee, Uniswap will distribute on these 10 owners. So I have 10% of that. So whatever, let's say 10 lakh rupees of transaction fee in a month. So each of the owner will get 10 lakh. Sorry, 10 lakh divided by 10, 1 lakh, right? So that is how token can be used as a share also. Then there is a little bit of difference between utility token and security token. Utility tokens are something like Ethereum or let's say Bitcoin, which you can use it. So there are certain utilization of that asset, utilization of that token, or let's say this compound token, C tokens in this kind of Uniswap. So it has certain value, right? And it has certain usage. I can use it to, let's say, if you want to create an NFT and you have to use Ethereum platform, you need to have certain Ethereum coins. Without that, you cannot create. If I go and create certain a kind of MetaMask login and I want to create a there and I'll show you there are different places where you can create an NFT, but most of them 90 to 95% of them use Ethereum platform to create a or to use the Ethereum blockchain to create a NFT. You have to pay certain fees on Ether or Ethereum. So Ethereum becomes a utility token there because you are using the token to create something, right? So that is the usage of utility token. Security tokens are mostly this investment contract which we discussed right now, right? That house property or let's say tokenized a share, right? So those are basically investment opportunities, right? Normal securities like you have shares, mutual funds, SIPs, right? So tokens, when they're used as an investment asset, right? Uh, they are known as security tokens, and they are actually regulated. In USA, there is a test called House, HOWE test, right? So how that instrument, how that financial instrument will be known as a security, right? So there are three conditions need to be met, right? If they're meeting, then only they'll be known as a security tokens. So the major difference between these two, utility tokens value will keep fluctuating. Like you will not have any control in it. Today, Ethereum is running at 3.5 or 4 lakhs rupees. After 10 or 15 days, it might be 2 lakhs. You do not have any regulatory control is not there in those kind of utility tokens. Security tokens will be at this point of time. The objective is or the vision is that it will be managed by certain regulations or rules, right? So that's why if you see in Uniswap or any kind of decentralized exchanges, one cryptocurrency and other will be mostly stable coin, right? Because you know that it is regulated. The stable coin is regulated, right? So it will be ruled or it will be regulated by certain rules or certain logic. So there will be fluctuation. Like let's say I have an asset, I have invested in this house, the building, and I have taken 10 tokens or 5 tokens. Value will keep fluctuating. The amount of money I'll get will keep fluctuating. But again, it has certain regulations to it, right? It cannot fluctuate like tomorrow it cannot become zero or tomorrow it will not become zero, right? That is almost guaranteed. And obviously it need to be insured and all those things. But in the other case, utility token, these values keep fluctuating. There is no regulation to it. And any questions on this? I'll take one more slide only, then whatever it is left out, we'll discuss in next class. So security tokens, utility tokens, payment tokens. Payment tokens are basically coins. Bitcoin is a famous example of Bitcoin do not have any other thing. So though Bitcoin started as a blockchain platform, supposed to be the foundation of everything, but right now if you see, Bitcoin still is only kind of a exchange. It has only value in terms of exchange. A lot of the smart contracts and all those things are using either Ethereum, Ripple, other kind of platforms rather than Bitcoin. Because again, Bitcoin has certain issues which we'll discuss in the next class. It is slow, it has certain disadvantages. Then what about non-fungible tokens, right? Non-fungible tokens are what we're discussing. All those digital art, digital asset, which have certain uniqueness to it, right? Can it be tokenized, right? And you can sell it. Let's say you are the example I was giving. You are very good at artwork, right? You create your and you can and I'll give you those site names. You can go through that, and some of you might do better than that. Only thing is that they know the process how to create, and you have to take that chance, right? Uh, so let me show you, and you can search and go and what do you think? What how much this artwork will cost? This cat. This I think everybody can see that, right? How much do you think that this artwork, this is a digital artwork of a cat in CryptoKitties? How much do you think that it will have value?
So 2 lakhs.
Close to that. So it is around 600 ETH. So $1,70,000. So multiply by 50 or 60 or 80, whatever the exchange rate. So now the question is, can I create it? Can you create it? Yes. But why do you think that uniqueness can? Because CryptoKitties is a NFT marketplace, not a marketplace, basically where you can feed and breed cats, right? And it has a certain uniqueness. You remember how much time some of you might play this PUBG or all those things, right? And that was interesting, which I came to know last year or year before that. One of my cousin brother, he used to play a lot, and he sold his account for 10,000 rupees. Until who will be mad enough to buy your account? He told no, people are selling it. and I could not believe it. The same thing here. Somebody has created this cat, and there are certain uniqueness to it, and he has bred it, he has kept it in that CryptoKitties. And now few months back it was sold into 600 Ethereum. One Ethereum is around right now, I think 3,500 or $4,000. At today's price, it will be more than that. But during that time, he sold it at $1,70,000. So I know that some part of it is very crazy. It looks like frenzy, but again, I do see there are opportunities for art creators. Recently, I think I forgot that music artist name, and I think this example also we discussed earlier. Most of the revenue, if you are a singer, right? Generally, you are associated with these record labels in US and Europe, and most of the revenue goes to them, right? Now, what happens if I say that okay, I see upcoming singer in a certain street or certain like clubs, and I know that that person has a huge talent. Now, what I'll say, I'll create a NFT of his songs. His and that organization will be managing all the artwork, all the songs which is that the person is going to sing, and will generate revenue. Will collect revenue. Let's say I sold his songs or his whatever creative capabilities and create NFTs out of it. Now what happens? People, let's say, start buying those NFTs or buying that ownership of that his digital work. Whatever, $1,000, 5,000, 10,000, $20,000, and with that amount of money, he'll be able to kind of publish his songs. He'll be able to kind of at least whatever required to buy equipment or buy instrument to record songs, publish it in a platform, right? See, now what happens is digital, whatever the ownership now is not with a record label. It is owned by people like common people like you and me who believe in that person in the beginning, right? Not those record labels who are basically profit making or the kind of they'll take a huge cut of that person's kind of income. So that is something which I find interesting and which I believe which will have a greater impact rather than obviously people will still do. I still cannot believe that somebody bought a PUBG account for 10,000 rupees. So obviously people will be there, but I see the opportunity or the kind of huge case of NFT in those kind of situations where emerging artists, emerging singers will have a platform where rather than sharing 60 to 80% of the revenue with the record label, they can share 30 to 40% or less than of that revenue with common people like you and me who can invest in their capabilities, right? Who can pay money, who can buy tokens, which will fund them to create their own songs or record their own songs and release it, right? That is something where which personally I believe there is a lot of potential. But again, like currently, unfortunately or fortunately, this is something which is in a lot of discussion or lot of money is being circulated in this space. Okay, so 5 or 6 slides left. We'll discuss in next class. Okay, if there are any questions, we can discuss for next 1 or 2 minutes. Otherwise, we'll stop.
Sir, I missed my attendance.
Yeah, roll number 284.
Yes, sir, I'm also.
Roll number
121. So 343.
121. 121 I have given. 3
So
106.
171.
171. Okay. Then
Sir, 345.
345. Okay.
021.
021. Okay. Anyone
So
else?
106.
106. Okay.
Sir, 045.
045. Okay.
So 343.
343. Okay. Anyone else? Yeah.